All right, welcome everyone to another deep dive. Today we're going to kind of go back in time and dig into a really, really pivotal period in American history, the Great Depression.
Right.
And we've got some great material here to work with. We've got, the historical overviews to set the scene. We've got analyses that delve into how people actually experienced the Depression. And of course, we have to look at how the government responded and tried to navigate this massive crisis.
Right.
So I guess for this deep dive, our goal is to, really try to understand, what were all the factors, all the interconnected pieces that led to this crisis. What was it like for people like on a day-to-day basis living through it, and what were the lasting changes, in American government and society that emerged from this period?
I think that's right. And as we, as we go on this journey with us, I think what's really fascinating is, we want to try to move beyond, just the facts and figures, like the dry statistics, and really try to kind of unpack the mechanisms at work, the human stories, behind those numbers, and really grapple with the long-term consequences of this incredibly pivotal era.
Yeah, I mean, it's one of those things, you read about it in history books and you see the pictures, but it's hard to really wrap your mind around what it must have been like to live through something like that.
Absolutely.
So let's start, I guess, with the big kind of, I guess you could say, the visible eruption of this crisis, the stock market crash of 1929.
Right.
Black Thursday, October 24th. You had this incredible loss of value, just disappearing into thin air, billions of dollars. It's estimated around $10 billion on that day alone.
Wow.
Which, if you adjust for inflation, that's something like $100 billion today.
It's just an astronomical sum.
Just to vanish, and you can only imagine the wave of panic that must have swept through the markets, through businesses, through people's homes.
Yeah, I mean, it was a huge psychological shock to the system, right?
Yeah.
Just to see that much value just evaporate, and of course that day of just frantic selling, it didn't stop there. It was followed by Black Tuesday just a few days later on October 29th, and that really marked the beginning of this kind of sustained, and very steep market decline.
And it's hard to even fathom the scale of the losses, right?
It is. I mean, if you look at some of the specific examples, you had shares of U.S. Steel, a major company, plummeting from, $262 a share to just $22.
Yeah.
General Motors, another industrial giant, dropping from $73 to just $8 a share. I mean, these are, huge drops. And it wasn't just, kind of everyday investors. We're talking about, people of immense wealth, like the Rockefellers. I mean, reportedly 4/5 of Rockefeller's fortune just vanished during this period.
Wow.
I mean, it really gives you a sense of the magnitude of the financial losses.
Yeah, and it's tempting, right, to kind of point to the crash and say, okay, well, that's what caused the Great Depression. But I think what our sources really point to is that it was more like, kind of the breaking point. It kind of exposed all these deeper issues, all these vulnerabilities that had been building up in the economy.
That's exactly right. It was a catalyst, but it was a catalyst for something that was really kind of waiting to happen.
Yeah.
The stage was already set for a major economic downturn. And you can see this if you look at some of the trends that were happening in the years leading up to the crash. One of the big ones is this growing gap between the rich and everyone else.
Right. Yeah.
And throughout the 1920s, you see this really dramatic increase in income inequality. The wealthiest Americans, they saw their income soar, some estimates say by as much as 75%. But for most Americans, the gains were much smaller, more like 10%.
Yeah.
And so you have this kind of situation where, a lot of the benefits of economic growth are flowing to the top, and that creates a lot of problems in terms of demand, in terms of overall economic stability. And then you have, government policies like low taxes and easy credit that really favored the wealthy and probably contributed to this growing inequality.
Yeah, and it does seem like there was this kind of fundamental problem with demand, right? I mean, you have this, the Roaring '20s. You have all this growth in production, this new consumer culture. But it seems like, especially when you look at the market for big ticket items, things like automobiles, it was becoming saturated.
Right.
Once everyone who could afford a car had a car, then what? The rate of new purchases slowed. You had this this reduced production, which led to layoffs, and then of course people have less money to spend, so it's this kind of downward spiral.
Absolutely. I mean, it's a classic example of kind of a boom and bust cycle, right? You have this period of rapid growth and expansion, and then, at some point you hit this limit and things start to contract, and it can happen very, very quickly. And it's interesting because even during this period, that we think of as the prosperous roaring 20s, unemployment was still hovering around 7%,
Right.
which is, a significant portion of the population,
Right.
without steady work, without economic security.
Yeah.
So, even during this period of perceived prosperity, there were underlying weaknesses, in the economy.
Yeah, and it's important to remember that it wasn't just the urban centers that were struggling. I mean, farmers, particularly in the South and the West, they have been facing economic hardship, really for almost a decade, leading up to the crash. I mean, going back to, kind of 1920, 1921.
That's right. And farm prices plummeted after World War I. You had this situation of overproduction, weak demand, both domestically and internationally.
Right.
And then you have, kind of environmental factors compounding the problem.
Right.
Things like soil exhaustion, particularly in the West, where farmers had really kind of pushed the land to its limits. And so they were facing declining yields. They were facing, increasing costs, and they were struggling to make ends meet. They couldn't keep up with their loan payments, and banks in rural areas started to restrict credit,
Yeah.
which further kind of choked off the flow of money in the agricultural sector.
Yeah, and it's interesting how all of these kind of different economic pressures, they kind of interconnected and kind of fed into each other.
Right.
You had this oversupply in agriculture, this weakening demand both at home and abroad, and then you had all this intense speculation going on in the stock market. I mean, people were investing heavily, often with borrowed money. Not necessarily based on the actual value of companies, but on this expectation that stock prices would just keep going up and up.
Right.
And that's kind of the classic definition of a speculative bubble, right?
It is. I mean, you have this disconnect between the underlying fundamentals of the economy and the kind of the inflated expectations, the speculative frenzy that's driving the market.
Right.
And that's always a dangerous situation because, at some point that bubble has to burst.
Yeah. Yeah, so you have all these underlying weaknesses, right? You have this rising inequality, this kind of softening demand, this agricultural crisis, this over speculation, and then the crash happens, and it's like this trigger that just unleashes this wave of panic and uncertainty, and it seems like some of the policy responses actually made things worse.
They did, unfortunately. One of the most, I think, striking examples of that is the Smoot-Hawley tariff of 1930.
Right.
The idea behind this was to try to protect American industries,
Yeah.
By imposing very, very high tariffs on imported goods, the highest in U.S. history, in fact.
Wow.
And the thinking was, well, this will make American goods more competitive. This will protect American jobs. But in reality, it had this disastrous effect.
Right.
Because other countries, they retaliated, they imposed their own tariffs on American goods. And so international trade just collapsed. You had, global trade falling from, some estimates say $36 billion to just $12 billion within a few years. U.S. exports plummeted. I mean, almost 80%.
Wow.
So it really backfired in a huge way.
Yeah, and it just seems like, kind of bad timing all around because, you have the global economy already kind of, facing difficulties, and then you kind of throw this wrench into the system and it just kind of exacerbates everything.
Yeah, it was a case of trying to kind of fix a domestic problem, but not really thinking about the broader global consequences.
Right.
Right. And it wasn't just the tariff. I mean, the Federal Reserve's actions at the time didn't really help to stabilize things either. Instead of kind of easing monetary policy, they actually tightened credit and raised interest rates, which seems kind of counterintuitive, when you're in the midst of this economic downturn. Yeah, and it really reflects, the kind of the economic thinking of the time, right? And there was this idea that, maybe tightening credit during a period of speculation could kind of help to curb what we're seeing as excesses. But in the context of a rapidly contracting economy, where you're seeing deflationary pressures, it really had the opposite effect. It actually made it harder for businesses and individuals to borrow money, to invest, and it kind of deepened the financial crisis.
Yeah, yeah. And then of course you have the bank runs. I mean, people are understandably afraid, right? They think their banks are going to fail, so they rush to withdraw their deposits, and that of course just creates a self-fulfilling prophecy in a lot of ways. I mean, you have this widespread panic, and it leads to even more banks collapsing.
Yeah, and it's this kind of vicious cycle, right? Fear leads to actions that then create more fear and more panic. And the numbers are really staggering. I mean, in 1930, over 1,300 banks failed. And that number jumped to almost 2,300 in 1932. And it's important to remember that these weren't just kind of abstract financial institutions. These were places where ordinary people held their savings. This was their access to credit. And so when these banks closed, that security vanished.
Yeah. Yeah. So you have this massive economic storm underway. What was Hoover's strategy for dealing with this? I mean, what was kind of his approach?
Well, Hoover's approach really stemmed from his deeply held beliefs about the role of government and his kind of philosophy of what he called associationalism.
Okay.
And this is really an approach that emphasized voluntary cooperation, between businesses, labor, and government, but without direct government control, without direct government aid.
Hmm.
And so he encouraged businesses to maintain employment levels, even though it was becoming increasingly difficult for them to do so. He urged private charities to step up and provide relief to those in need. He even established this organization called the President's Organization for Unemployment Relief, or POR, to try to kind of coordinate these private efforts.
Yeah.
But the problem was that this reliance on voluntary efforts just wasn't enough. I mean, the scale of the crisis was just overwhelming. I mean, private charities were quickly overwhelmed by the sheer number of people who needed help. By the middle of 1932, you had major charities in cities like New York. They were closing their doors because they had exhausted all their funds. And in places like Atlanta, relief organizations could only offer, a meager, a few dollars a week, per family.
Wow.
And it just wasn't enough to even meet basic needs.
Yeah, and we know that Hoover was kind of ideologically opposed to this idea of direct government intervention, right? I mean, he really believed that it would kind of undermine people's work ethic, that it would create this kind of dependency.
Yeah, that's right.
Mhm.
He was a strong believer in individual initiative, self-reliance. He really saw those as the engines of economic progress. And he worried that direct government assistance would discourage those values,
Mhm.
that it would make people reliant on handouts.
Right, right. But eventually he did create the Reconstruction Finance Corporation, the RFC. What was the purpose of that?
Yeah, so the RFC, which was created in 1932, represented a kind of a notable shift, I think, in Hoover's thinking, although some would say it was too little too late.
Right.
And the idea behind the RFC was to provide emergency loans to banks, to railroads, to other large industries,
Mhm.
really with the idea that by stabilizing these key sectors of the economy, that would have this kind of trickle-down effect,
Yeah.
right? That it would eventually help individuals as well.
Right.
But it faced a lot of criticism because people saw it as kind of a millionaire's dole,
Right.
that it was helping the big institutions, but it wasn't really doing anything to directly address the immediate needs of people who were facing, starvation, who were facing homelessness.
Yeah. Yeah. And so, I mean, let's shift our focus now to what daily life was actually like during this period. I mean, our sources paint this really sobering picture. I mean, by 1932, you have nearly 1 out of every 4 Americans unemployed. And over half of those who still had jobs were only working part-time.
Right.
So you can imagine, just this pervasive uncertainty, this growing sense of desperation. People's savings are wiped out. They become reliant on, help from family, from friends, but those resources are also strained, as the Depression drags on. And so you see widespread defaults on loans, you see home foreclosures. It's just this kind of this downward spiral for so many people.
Yeah, and I think it's hard for us to really imagine what it was like to live with that level of constant fear and anxiety, not knowing, where your next meal was coming from, whether you were going to be able to keep a roof over your head. And then, of course, you have the emergence of the Hoovervilles, right? These kind of shanty towns that spring up across the country, populated by people who had lost everything.
Right.
And they really became this kind of this powerful symbol of the era.
Yeah, I mean, it's just this this stark visual representation of the widespread homelessness, the poverty, the despair. People are living in these makeshift shelters, often lacking basic sanitation, lacking access to healthcare. It's really a bleak picture.
It is. And, I think what really brings it home are some of the personal stories that we have in our sources. You have this woman writing to Eleanor Roosevelt, just desperate, pleading for any kind of work for her husband who's a surveyor, and she's about to give birth.
Right.
And they're just facing destitution. You have a doctor, recall seeing people, fainting from hunger on public transportation. I mean, it really underscores the human tragedy of this period.
Yeah, and it seems like, women in particular faced a lot of hardship during this time. I mean, you have this kind of prevailing belief in the male breadwinner, right? And so, married women were often laid off, or they faced these real barriers to finding employment, even though, many families were dependent on women's earnings.
Yeah, it was this double bind, right? I mean, on the one hand, you have families that desperately needed, women to work to bring in income, but on the other hand, you have these deeply ingrained societal norms that said, a woman's place is in the home, and that, men should be the primary breadwinners.
Right.
And so women were often kind of, pushed out of the workforce, or they were relegated to these kind of low-paying jobs. And then, of course, single women were particularly vulnerable,
Right.
facing not only economic hardship, but also, increased social stigma, and even the risk of exploitation.
Yeah, and it's really striking, how the impact of the Depression fell disproportionately on non-white Americans. I mean, I think one of our sources has this quote, that kind of sums it up. It says, "The Negro was born in depression," and you see this in the unemployment numbers. Black unemployment reached, a staggering 50% in 1932.
Right.
I mean, just think about that.
It's just an unimaginable figure. And it really underscores the deep racial inequalities that were just, so deeply embedded in American society at this time. And the Depression just exacerbated those inequalities. Black workers were typically the first to be fired, the last to be hired. And even those who managed to keep their jobs often saw, their already low wages cut even further.
Right, right. And then, of course, you have this environmental catastrophe of the Dust Bowl, which kind of adds another layer of hardship and suffering to this period. Beginning around 1932, you have these severe and prolonged droughts that just ravage the Great Plains, and it's made worse by really unsustainable agricultural practices. Right.
Right. You had this kind of widespread plowing up of the native grasslands, to plant wheat, and that removed the natural ground cover that had held the topsoil in place. And so when the droughts hit, that dry soil just turned to dust. And you had these massive dust storms, these choking dust storms that just swept across the region. People describe feeling, baked out, blown out, and broke.
Yeah.
And it was just this incredible ecological disaster.
Yeah, and it led to this mass migration, right? This kind of exodus westward, particularly to California, and I think we often hear this term Okies, which was often used in a pretty derogatory way to refer to these migrants from Oklahoma and the surrounding states. And Oklahoma alone lost nearly 20% of its population. I mean, just to give you a sense of the scale of this movement of people.
Yeah, it was a desperate search for survival, for opportunity. People were fleeing this ecological disaster, this economic collapse, and they were hoping to find a better life in California. But often what they found was more hardship, more discrimination. And I think one of the most powerful images of this period is Dorothy Elijah's photograph, Migrant Mother. Which really captures the hardship and the uncertainty that these families faced.
Yeah, and it's remarkable, to think about the kinds of barriers that they encountered. Not just the hardship of the journey itself, but the hostility that they often faced when they arrived in California. There were even cases of of states setting up these kind of border blockades, trying to keep out these impoverished migrants. And you would see signs, that said things like, no jobs in California.
Yeah.
It's just this incredibly unwelcoming environment.
Yeah, and it's interesting because this kind of internal displacement and this migration within the United States, it kind of coincided with this rise in anti-immigrant sentiment at the national level. You had the Hoover administration. They really kind of stepped up scrutiny of visa applications, particularly for laborers. Deportations increased,
Wow.
particularly targeting Mexican immigrants in the Southwest. So it was this period of kind of heightened anxiety, about outsiders, about people coming in and taking jobs,
Yeah.
and it was a really troubling aspect of this period.
Yeah, and then of course we can't forget about the Bonus Army in the summer of 1932. This was this group of World War I veterans and their families. They marched on Washington D.C. demanding early payment of the bonuses that they had been promised for their service.
Right.
And these veterans, many of them were facing severe economic hardship themselves, and they saw this promised bonus as a potential lifeline. And so they set up this encampment in Anacostia Flats. They called it a Hooverville, kind of echoing the shanty towns that were springing up across the country. And they were engaged in peaceful protest. They weren't trying to overthrow the government or anything like that. They were just trying to get what they felt they were owed. But Hoover, he opposed the bill that would authorize early payment, and it was ultimately defeated in the Senate. And then the situation turned really ugly, when General MacArthur was ordered to kind of forcibly remove the remaining veterans.
Yeah, it was a really dark chapter, and the forceful dispersal of the Bonus Army, it involved tear gas, the burning of their shelters,
Yeah.
it even resulted in the deaths of some of the marchers.
Wow.
And it created this huge public outcry. People were horrified by the way that these veterans were treated. And it really damaged Hoover's public image. It really reinforced this perception that he was out of touch with the suffering of ordinary Americans.
Right.
And it really kind of, it set the stage for the 1932 election and the overwhelming victory of Franklin Delano Roosevelt, who promised this new deal for the American people.
Yeah, and I think, when you think about that first inaugural address,
Right.
With that famous line, the only thing we have to fear is fear itself.
Right.
I mean, it must have just been this beacon of hope to so many people who had just been through, years of hardship and uncertainty.
Yeah, it was a really, really powerful message, at a time when people really needed something to kind of cling to believe in. And Roosevelt, he didn't waste any time.
Yeah.
He moved very, very quickly to address the banking crisis.
Yeah.
He declared this bank holiday, to kind of give the banks a chance to kind of get their house in order. He pushed through the Emergency Banking Act.
Right.
And then his fireside chats, I think were just remarkably effective at kind of communicating directly with the public, explaining what he was doing, why he was doing it, and really trying to kind of restore some measure of confidence. And then, of course, you had the Glass-Steagall Act, which created the Federal Deposit Insurance Corporation, the FDIC, which was, a critical step in stabilizing the financial sector.
Yeah, and then just this flurry of relief programs, right? I mean, you have the Civilian Conservation Corps, the CCC, putting young men to work on environmental conservation projects.
Right.
You have the Federal Emergency Relief Administration, FERA, providing direct aid to the states. You have the Tennessee Valley Authority, the TVA, this really ambitious program for regional development. I mean, it's just this incredible period of government activity, really trying to address the crisis on multiple fronts.
Yeah, those first 100 days of Roosevelt's administration were truly transformative, and you see this kind of this willingness to experiment, to try new things, to really kind of, throw everything at the wall and see what sticks. And you have the Agricultural Adjustment Administration, the AAA, aimed at raising farm prices by limiting production.
Right.
You had the National Recovery Administration, the NRA, which was intended to kind of coordinate industrial production and labor practices, although that was later declared unconstitutional by the Supreme Court.
Right.
And then, in addition to those kind of, programs that were aimed at specific sectors, you had You had these big job creation programs, like the Civil Works Administration, the CWA, the Public Works Administration, the PWA,
Right.
and those put millions of Americans to work on public works projects, building roads, bridges, dams, schools, all sorts of things.
Yeah. And the New Deal had this particularly significant impact on the South, right?
Well,
A region that had long struggled with poverty.
right.
And the AAA, aimed to help, by increasing commodity prices, for crops like cotton. But it seems like those benefits didn't always reach the most vulnerable,
Yeah.
the tenant farmers, the sharecroppers, the people who are actually working the land.
Right. That's a really important point. Often the landowners, they benefited more from the AAA subsidies than the people who were actually doing the labor.
Right.
And in some cases, it actually led to sharecroppers being displaced, because landowners were taking land out of production.
Right.
But, on the other hand, the NRA, it did work to ban child labor in the South, which was a significant achievement. And the Fair Labor Standards Act of 1938, with its establishment of a minimum wage, had a particularly positive effect on low-wage workers in the South. And then the TVA, I think, is another, really kind of stands out as this remarkably ambitious and ultimately successful program for economic development in the Tennessee River Valley, through hydroelectric power and other initiatives.
Yeah, it's really amazing, kind of the scope of the projects that the government undertook during this period.
Yeah.
But of course, the New Deal wasn't without its critics, right?
Of course not. I mean, you had voices of protest coming from all directions.
Yeah.
I mean, some people felt that it didn't go far enough.
Yeah.
In addressing the fundamental inequalities in American society. Others felt that it was too much government intervention. You had figures like Huey Long, with his Share Our Wealth proposal. You had Francis Townsend advocating for a national old age pension plan. You had Father Charles Coughlin criticizing Roosevelt's financial policies.
Right.
And these were all, really kind of tapping into significant currents of public opinion. Long's message of wealth redistribution, really resonated with a lot of people who felt that the economic system was fundamentally unfair. Townsend's plan offered a potential solution for the plight of the elderly. And Coughlin's criticisms, while they were often controversial, attracted a large following among people who were dissatisfied with the status quo. And of course, Roosevelt also faced staunch opposition from, conservative politicians and business leaders who saw the New Deal as a threat to individual liberty, to free markets.
Right.
And as you mentioned earlier, the Supreme Court did strike down some key pieces of New Deal legislation. So there was this kind of constant push and pull, between those who supported the New Deal and those who opposed it.
Yeah, and this kind of, pushback, the continuing economic challenges, it all kind of leads to